The JSE All-Share index slipped nearly 2% to around 65,489 points, striking a more negative sentiment across international markets today amid renewed concerns over inflation. Let's take this up with Roy Mutooni, Analyst at ABSA Asset Management, to help us talk about that aspect and much more of the lunchtime news. Good to have you as always, Roy. As ever, let's begin with a quick look at how the markets are doing at intraday trade.
Thanks, Tembekile. No, it's an ugly day. We started off, we're down about 2%. In the top 40, I can only see two shares positive. That's Anheuser-Busch and BAT, British American Tobacco, which are as defensive as it gets. Everything else is well down, and I think this is just following on from what we saw in Asian markets yesterday and the U.S. markets as well. Like you said, it's inflation, it's outlook for interest rates. There's really nothing positive out there.
And, of course, one of the main stories today when you talk about money in South Africans' pockets, inflation, SA's consumer inflation numbers out. It's jumped to a 5-year high. Let's talk about some of the present and future cost pressures on people at the moment.
So, yes, it was a surprise. I think the market was expecting something around 6.1% on headline inflation. It came in at 6.5. The interesting thing is core inflation was basically flat at about 4.1. So that excludes transport and fuel costs. And you can imagine that's what's been going up. Transport and food costs, rather. That's what's been going up. So the Monetary Policy Committee has quite a big challenge here. In that number, we didn't see much in terms of demand pull inflation. And that's what interest rates seek to compress. So they're going to have to walk a very fine line. The rest of the world is hiking rates. You can't be left too far behind because there's a competition for capital. But as well, you can't hike too far and crash demand, especially when it's only now starting to recover in the SA. So it's going to be interesting to see the tone that comes out of the Monetary Policy Committee at the next meeting.
So Anglo American has now published its results for the rough diamond sales value of De Beers' fifth sales cycle of 2022. How's it looking?
No, it looks very good. It's actually much better than people expected. I think when I looked at the numbers, in this first half, they've sold 65% of what they sold last year. So even on a seasonally adjusted basis, it's ahead. And they're attributing this to strong U.S. demand and also China emerging from their lockdowns. So it just seems to me that maybe diamonds are the last resort, the last harbor of value out there. So prices are good, volumes are good. It augurs quite well for the De Beers and Anglo results when they come out later on this year.
Someone else that's hoping to make money in South Africa, at least, is the American multinational Amazon, looking to come here in February of next year. Is that an adventure that would be worth it? Is there any slice of the retail pie that's left at this point?
Oh, there's a significant slice. I think estimates right now are that in the U.S., online retail is about 13-14% of total retail. In SA, we're probably around 2%, 3%, give or take. There's one big dominant player, that's Takealot, and then there's a whole lot of others. Amazon can bring a lot of innovation. They can bring Amazon Prime, which is an account that you pay monthly, which saves you from delivery fees and a whole bunch of other things around logistics and all that. So there's definitely space. It will be incredibly competitive, but I think the SA consumer stands to benefit, especially if they open up their global catalog. So that we can order pretty much anything that you can see on Amazon.com. So I think it's good news.
Roy Mutooni, I'll add some items to your cart then as soon as they come. Thank you very much for speaking to us today.
Always a pleasure, Tembekile.
Well, it's